Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is host Richard Benuli. Today is December 11th, and we have Dr. Marc Faber and Ira Harris. Dr. Faber is the editor and publisher of the Gloom, Boom, and Doom report, which we are a subscriber. It highlights unusual investment opportunities, and it's a great publication. Dr. Faber is the author of several books as well, and is known for his contrarian investment approach. Ira is a past hedge fund manager, current global trader in foreign currencies, bonds, commodities, and equities for over 40 years. He has served as CME director from 1997 to 2003, and also a stint most recently. Welcome, gentlemen.
Thank you. This must be my early Christmas present that I get to sit with Dr. Faber, because these are always wonderful. So thank you for the gift.
Don't exaggerate. Let's stay modest.
Dr. Faber, I'm not running for office. I don't have to lie.
Yes, we're not politicians.
Just would begin with your global macro view on the economy and the financial markets, Dr. Faber.
Well, this is obviously a very complex question because, as you know, an economy consists of different sectors. And in the global economy, we have different countries at different stages of economic development. And then we had this huge financial bubble in the world called the financial system. And some markets are very high. Statistically seen, the US is very highly valued at the present time, in particular the popular stocks, the FANG stocks, the Magnificent Seven and so forth. And we have other markets that are relatively depressed. And some markets are actually also in absolute terms depressed. And I'm bringing this up because people, when you meet them at parties and at whatever events, they always say, yeah, I want to buy low and sell high. But actually, throughout financial history, people have done exactly the opposite. They buy high and sell low. I mean, this is a remarkable thing. I mean, I'm bringing this up because, as you know, at the present time, individuals and institutions in America have piled into US stocks. And the cash positions of both individuals and of financial institutions as a percentage of total assets is very low. It's at a record low. So the public and the financial institutions are euphoric about this market, especially after Trump got elected. But at the same time, you have, say, a proven investor that has done well over half a century, who is increasing his cash position. So you have the masses of people who buy things they have actually no clue about. They say, yes, NVIDIA is good, but exactly what NVIDIA does, they don't know. These are the same people that bought Cisco in 1999, 2000. And one man who essentially is a patient investor, is not a genius, he says himself, and Charlie Munger, who passed away recently, they both argued their strength is their patience and also long-term orientation, and that they don't have to deliver every quarter results. So this man, Warren Buffett, as a percentage of total assets, he's at a record high. It gives you something to think about. I mean, philosophically, the public buying like crazy, and one man who is a proven investor is maintaining a high cash position. And concerning the economy, all I can tell is that we had a setback I'd call it actually an artificial setback brought about by COVID. But as we know now, and as some people knew right from the start, this COVID is an organized business deal, the purpose of which eludes me somewhat. But anyway, the economy collapsed. And from the collapsed low, say in May, June 2020, we had a recovery in the global economy, but most sectors of the global economy are still below the level in 2019, 2018. So we had a recovery, but it's not as strong as one would have expected it to be. And some countries are actually hardly recovering. And some sectors are actually way down from the peak level in 2019, partly because society has changed. I mean, I'm a regular visitor to bars late at night because I work at night. And people told me, as an old man, I need to learn something new. So I started to play pool at the pool tables. And in Thailand, there's a lot of fun because the pool tables are in bars with girls and so forth. The girls are the best players because they play every night. So anyway, I'm learning to play pool. And I can see the business is not like 10 years ago in bars because the young people drink less. That's a fact. And I recently recommended that the things would get so bad in the financial markets shortly that people would go back to drinking and smoking. And I recommended tobacco stocks and beverage stocks. And then someone from Austria who owns a winery, he wrote an email to me and said, Mark, you're wrong about the beverage stocks because there's less drinking in society, period. The young people take all kinds of drugs, which are much cheaper than a can of beer. That's an amazing thing. They go to disco, take these drugs, and they don't drink beer like we used to, or I still used to. So the global economy, in my view, is actually weak. Whether it will tilt into a serious recession or not, I wouldn't know. But one thing I know, we're dealing with a two-tiered economy. The money printing by the Fed has not helped the typical household, not at all. The typical household is faced, and this is not only in the US, it's in Europe the same, and in other countries the same, is faced with cost of living increases that exceed his wage gains. And as a result of that, over 70% of people in the US live paycheck to paycheck. Paycheck to paycheck means essentially you have to wait for your check at the end of the month to pay your bills. That is the definition of living paycheck to paycheck. In my view, it's a modern form of slavery because the people who live on paychecks, they cannot express their own opinions. They have to do what they're told by the system or by the companies they work for and so forth. And the rich people, they benefited from money printing. Like, say, Marc Faber benefited from money printing because my asset value has gone up. Not necessarily as much as I would desire, but it's gone up. And this is the crazy thing about monetary inflation. It distorts everything. The prices are very difficult to determine. You can say this is expensive compared to that and so on, but it's very difficult to say this is absolutely expensive or absolutely cheap because the monetary inflation touches different sectors of the economy at different times, and it creates these bubbles here and a bubble there, and lately it's been a bubble everywhere. This is a unique situation, and Ira, he can talk about this in more details. The Fed, in my opinion, the central bank in America, they're probably right to cut interest rates. I'm not saying they're right absolutely, but they're probably right when they look at the labor market and when they look at the real economy of poor people, of the typical household in America. But if I gave someone the financial picture and said, Bitcoins is at an all-time high, gold is near a high, stocks are at an all-time high, and the inflation is such and such, and I look at the inflation from a different perspective as the Bureau of Labor Statistics. The Bureau of Labor Statistics consists of clowns. They're ignorant people. They had recently healthcare cost down 30% over the last 3 years. Now, I've seen letters that have been written to people which show that their insurance cost has gone up or will go up in the next 2 years by 90% or more. This is the reality, not what the Bureau of Labor Statistics statisticians that are clueless publish. And the Fed and Wall Street believes the Bureau of Labor Statistics because Wall Street loves inflation. They love monetary inflation. So assets go up and the fees go up. That is the essence of Wall Street, is that the assets go up in value and so the fees go up. But the reality of the typical household is struggling. And that not just in the US, it's worldwide, that cost of living increases are very high.
No, great observations, Dr. Faber. And what are your thoughts, Ira, on?
Well, we just had an election that surprised some people, but speaks to outcomes that Dr. Faber speaks about, which is, people are stupid up to a point, and then they're no longer stupid. So I believe that you can fool because they want to be fooled. Until they're not. And I think a lot of things that Dr. Faber talks about, are responsible for the election outcomes. And it's not just the United States. So let's travel around the world. I mean, Europe, to me, is the most dangerous place because there are outcomes there that a lot of people aren't ready for. We have Macron in France. It was only 15, 16 months ago that Macron was went to China to see Xi, comes back, and in that interview with Politico on his plane, makes the comment that we will not be a vassal state, meaning we will not bend and genuflect to the United States for the outcomes. Well, now he's entertaining Trump at Notre Dame and holding it, and they can't say so. He's in a very difficult situation. You have Marine Le Pen, who is very ready, and every misstep that Macron makes elevates her. And I'm not speaking good, bad, or indifferent. That's for the French people to decide. Germany is on a very dangerous path here. Then we had news about the Greens yesterday, so they're done in government, I think, for a while. So are we going to see a coalition of the CDU and the SPD? Maybe. Or is the AfD, the Alternative for Deutschland, going to do so well in the coming elections that the CDU is going to be forced into a coalition, which the world's just not ready for? And more importantly, how is Germany going to continue to react with what's going on in Europe? Because again, I can look at European interest rates, which are, if you look at the 10 years across the board, interest rates in Europe are far lower than the United States. Germany is probably 2% lower on the 10-year. I'm looking at the 10-year. And we have a meeting, of course, tomorrow with the ECB. But the only reason that European rates are where they're at is because people assume, that's ASSUME, they assume that the Germans stand behind the entire European project. But if that were to go awry, which could easily, with all the problems in Europe, it can happen. So the world is fraught with dangers. Forget the United States for a minute. It's fraught. And tomorrow also we have the SNB, which I hope we'll talk, because the Swiss National Bank is meeting tomorrow. I'm looking at Swiss interest rates, overnight rates or short-term rates. So if I go out to June of 2025, the market is predicting 14 basis points. Now, the overnight rate in Switzerland, which has been cut 3 times already this year, they're expecting 25 basis points tomorrow. I think that we're going to see 50 basis points because Schlegel, who's the new head of the Swiss National Bank, has been speaking about the strength of the overly strong Swiss franc. And we'll hear Dr. Faber, who knows far more than I'll ever know. But it's an overly strong Swiss franc, and you see it in some of the crosses. The euro Swiss cross is where 92.5 today. 92.75. So the Swiss franc is very strong. So I would tell you, watch the Swiss bank tomorrow, because if the market is anticipating 25 basis points, but today we saw the Canadians go 50, it won't surprise me to see the Swiss go 50 basis points tomorrow if Schlegel's view holds, and they're very concerned. So you have all these different things in the world, but as Dr. Faber talks about, you have a world laden with debt and dollar-denominated debt. And as U.S. rates go up, that acts as a drag on the global economy. And I'm going to bet that Scott Bessner, who comes from a global macro background, so I'm looking for these next 4 years. Well, I don't know how long he'll stay on as Secretary of Treasury, but he's very aware of what the situation. A stronger dollar does not help the global South, so to speak. They have far too much debt priced in dollars, and the higher the dollar goes, the more onerous that debt load is. So I'll leave it there because we have so much more to talk about.
What are your thoughts, Dr. Faber, on Europe, on what's happening in Germany? Ira mentioned the Swiss National Bank. Any thoughts there? Do you see companies in Germany relocating to China and Brazil?
Let's put it this way. The Germans, specifically, because when I grew up in the 50s and 60s, we talked about the German Wirtschaftswunder. These were the years of Adenauer and Erhard and, dynamic economic growth in Germany. And that continued until the, say, last 15 years or so. It was an example of a well-balanced economy that produced goods efficiently, quality goods, Mercedes cars, BMWs, Porsches. I mean, the German industry is very quality conscious, maybe not as quality conscious as the Japanese and the Swiss, but they are quality conscious. Anyway, the green socialists and communists, they have managed, I mean, this is an achievement in economic history, to destroy a well-functioning economy in a brief period of time. I mean, really brief period of time. I'd say it took them a bit longer than during the Bolshevik Revolution, but during the Bolshevik Revolution, the existing system, the Tsar system, wasn't very efficient to start with, so there wasn't that much to destroy. But in Germany, there was a lot to destroy. And I warn my Swiss friends The same is happening now in Switzerland. The socialists have become very powerful, and we should not underestimate their ideology of destruction, of envy. The whole ideology of socialism is built on the envy of the successful, hardworking, capitalistic entrepreneur, the way the entrepreneur was described by Schumpeter, who essentially innovates and drives profits forward through innovation and new technologies and the elimination of poor competitors or ill-prepared competitors. So there's this creative destruction that is going on all the time. But this was totally abandoned in the new German government that is run by the most incompetent type of people. These are people, and we have it in politics everywhere in the world. They go to universities, they study social sciences or political sciences and so forth. And after their studies, they never take on a job. They go right away and become kind of professional politicians. So these people, they never run a business. They never work themselves. They don't even know how to look after a family budget. But these people are then people who are in the bureaucracy, and they go and tell the entrepreneurs, the small business owners, the large business owners, all these people, they tell them how to run their businesses when they themselves never had a business in their lives. And that, I mean, of course, I agree with Milton Friedman that inflation is largely a monetary phenomenon. But I'd also say the government expenditures, I mean, the fiscal deficit is, of course, a contributing factor to the inflation. But another factor that is frequently overlooked is that the more regulation you have, the more costly your food bill will be in a restaurant. Say, if you can open a restaurant without regulation, then the restaurant operates at the cost structure that is, say, 40, 50% lower than the restaurant that is in a country where there's lots of regulation. I mean, here in Chiang Mai, and I have to say this, Chiang Mai is a pleasant place. It's the second largest city in Thailand, in the north of the country. And everybody who travels to Chiang Mai say, it has a nice feel about it. The rich people and poor people, they like it. There's some nice hotels in the city and around the city. So you can have luxury, but you can also have a small guest house that is perfectly nice and run by a family. Anyway, there's nothing unusual to see in Chiang Mai, but it's a center of motorcycle drivers from around the world and cyclists and people who like to hike, mountains and so forth. There are no high mountains. But the one unusual thing about Chiang Mai, and this is the only setup that exists in the world, is a boxing stadium. But the boxing stadium, instead of having galleries for the spectators, it is surrounded by bars with pool tables and sexy girls. Yeah, I've never seen anywhere in the world a stadium that is surrounded not by galleries for spectators, but by bars. And it's very popular, and lots of people go. And what is amazing is you hardly ever see a fight. I've seen in 1 year a fight, and that's all. It's very peaceful. Nobody cares about anybody else. They all smoke their cannabis and smoke cigarettes and drink heavily and play pool and have the girls and flirt and so forth and get drunk. It's a lot of fun place. But I said, if in Europe or in America, the regulators would close it down today because the toilets are not very hygienic. I mean, they're okay, but not to the standards of what the Swiss health police would demand. And the fire police would say, oh, never. There's no exit. You understand? So it's a very, I can see it there that if the regulators came in a developed country like England or Switzerland or Italy or America, it would never come off the ground. And yet it provides income for lots of people. And it's a fun place. So what I want to say is part of the inflation is government expansion with people that are incompetent, and they go and tell the entrepreneurs, you can't use Russian oil, you can't use Russian gas, we have to do it this way, and we have to close down the nuclear power plants and so forth and so on. And that increases the price of everything. And then they go and blame it on Putin. I tell you, is like watching a country commit suicide. That is my view. And I'm very concerned, and I want to explain to you my concern. I went to a private school in Switzerland because I wasn't so smart. So my parents thought, better send the idiot to a private school so he will have a ticket to university. So, okay. All my friends are from affluent families, Zurich high society, you know, living on the Gold Coast in Zurich or on the Zurich Berg and so forth. These people are politically completely agnostic. They're not interested in anything. And I tell you why. They're afraid of the socialists. In my case, I joined the neutrality initiative, and I've always made very strong comments about the incompetence and bad attitude of the socialists. And for the first time in 50 years, I got an audit by the tax office in Zurich. First time in 50 years, at the age of 78. You would have thought that the tax office would go after people who are at the peak of their earning season, they mean in the 50s, and not against a 70-year-old man who lives in Thailand. But this is it. People, the rich people, I had dinner with the leader of the AfD. First of all, in Germany, they portray the AfD like a Nazi party. Nothing could be further from the truth. I told this lady who is the head of the AfD, I'm sorry, I wouldn't join your party because you're not far enough to the right. Well, for me, they're a center party, and the socialists are very left. I would be more to the right than they are. And we joked, and so, and then I said, I suppose that all the rich people in Germany support you financially. She said, no, Mark, this is not true. They're afraid. They're afraid to be attacked by the socialists. And I can see it with my friends when we had this neutrality. I mean, Ira, he can tell you what his view is. But I think for Switzerland, it's very important to stay neutral. This is the only thing that we can do for the world. You understand? To be a meeting place and negotiate things and try to solve conflicts peacefully. But now, although everybody knows that the EU is a catastrophe, they want to join the EU, not the people, the politicians, because there's a lot of money that flows through the EU. Anyway, I'm in this committee for the neutrality of Switzerland, and I got attacked and so forth. But my friends, they're also afraid to be exposing themselves. And a lot of people the problem with the inflation is, when I may summarize it, is people in general, whether it's entrepreneurs or individuals, they like socialist policies. You get a subsidy here, you have children, the government pays you some fees, and so forth and so on. And the rich people, they make money out of social contributions and so forth, because the individuals then go and buy goods at Walmart, and the rich people, they own Walmart. So the money, whatever the government spends, flows into the pockets of the rich people. But the interesting thing is, afterwards, everybody hates inflation. So the policies that lead to inflation are popular, but the cost of living increase is unpopular. But as I said, I think it will end very badly, and I'll be very concerned in Switzerland, because we were very on the, say, conservative side until a few years ago. And I can see nowadays that the country is run by socialists.
Meet the Cedar Owl, a new economics and finance publication with a focus on environmentalism. We combine the Austrian School of Economics and market environmentalism principles for investing in a sustainable future. Follow the link in the description to get to know the Cedar Owl better, understand our values, our mission, exactly where we're coming from, and the type of content that we release on a cyclical basis every Thursday. Join us in targeting outperforming portfolio returns while making a positive impact on society and the environment through technology. Subscribe now for weekly insights, investment articles, and exclusive content.
Interesting observations. Dr. Faber, what are your thoughts, Ira, for what Dr. Faber said on Europe? Yeah.
The type of economic outcome. So when Dr. Faber talks about certain things, and I think we're going to see this. There was a big piece recently on the U.S. and a lot of this things that get spoken about. And I know people. I live it. I'm over 70 now. And I think, in this Trump administration, I think we're going to see it other places. You're going to see a lot of means testing for social welfare. Medicare, means tested. I think this is going to become, it's not really made it into the mainstream discussion, whatever the hell that means anymore anyway, because, we started out, but there are things that have to be attacked, and Dr. Faber is 100% right. Wealthy people, I put myself in that class, we know how to navigate through these difficult times. And that's why you see the growth in wealth inequality. And it's a global phenomenon because there is a global plutocracy. And a lot of it starts in Davos, by the way. They pretend otherwise because they come with a great social conscience, but they're some of the most full of shit people I've ever had the pleasure or not pleasure to sit and talk to, because that's what they're concerned about. They push an agenda, but they're in position. At one time, I think a full price ticket at Davos was $650,000. And I said, who would spend, unless you're walking out of there with some real inside information, why would you ever spend that much money to go attend to one of these things? Well, of course, seen and be seen, but you want to talk about a global plutocracy. That is certainly the epitome of it. But as we come down to it, there are things afoot around the world and that have to be answered to. Now, I'm not here to give answers to them because I don't know. So I'm only looking at it in the financial perspective. So when we look at the AfD, the Alternative for Deutschland, when we look at National Le Pen's party, these movements are real. You see it in Japan. Japan, had some real political, for them, that's political upheaval. For the recent, with Kishida gone, and now you have Ishiba, and that's going on. Xi is at a loss. You have the Iranians trying to figure out how the world works. There is so much disorder in the world, and yet, as Dr. Faber talks about, stock markets, equity markets continued on. And that's because liquidity is still so ample in the world. And, I come back to that interview that of Powell by Sorkin. And I give Sorkin credit because unlike the journalists who sit in the post-Fed meeting, the post-FOMC and ask questions only to hear themselves talk, at least Andrew Sorkin raised the issue about gold. And it came on the heels of a discussion, interestingly, that they were having about Volcker. Well, Powell likes to invoke Paul Volcker, and he's read the book, and he's, great. He understands nothing of Volcker. Volcker famously, and Sorkin, if he had done any bit of research, here's where I hold his feet to the fire, should have followed up the question when he asked him about gold. Paul Volcker viewed, as a central banker, gold as his enemy. Now, that's a very powerful statement because he gives gold a place in the global economy. And if it's his enemy, that means that when gold sends you a signal in the way it's pricing as a monetary phenomenon, you have to answer to it. Powell just said gold is speculative like Bitcoin. Well, that's nonsense because by every measure of every fundamental that I've used to make successful investments, when real yields go positive, gold always struggles. And with real yields, or as the Fed likes to say, R star, or the neutral rate, we've been real yields using their measures of inflation and others has been at 2%. And yet gold has continued to proceed as we're talking right now. Gold's up $35 today, and we're right back into the Trump election night. That's where gold is right now. So it broke $150, $200 off of the Trump election because of the uncertainty and the fact that Kamala and company were gone in a real sense. So the gold, but now we're back here. Why? And Powell cannot sit there and say gold is just a speculative business. Why does gold continue going higher? What are they sending? And Sorkin asked him about Fed credibility or central bank credibility. And Powell's not having any of it. Well, gold is absolutely a measure of central bank credibility in a fiat currency world. This is not 1929. This is not 1933. This isn't August of 1971. The credibility of the currencies across the board are based on the credibility of the central banks and, of course, fiscal policy. And fiscal policy is very important. And Powell said something else that was, again, he said we're not in a fiscal dominance world. Well, that's pure nonsense. Yes, we are in a fiscal dominance world. And I suggest for everybody who likes to pull out, there's so many PhD economists in the world that you can choose from amongst probably 15,000 of who you want to quote. But I could find, so you'll quote the 17 that Biden used to love to quote, headed by George Akerlof, who is, by the way, Janet Yellen's husband. Yeah, he's a Nobel Prize, but it's too steeped in politics. Why not quote John Cochrane, University of Chicago, Hoover Institute, Stanford, who talks about the importance of where we're at and all the growth that we've seen, as Dr. Faber talks about, through COVID and the huge monetary stimulus. It's all been fiscal stimulus that has driven the economy. The economy's not standing on its own legs. It's driven by fiscal stimulus. Now, if the Trumpers come in and are successful in cutting back that much fiscal stimulus, we're going into a recession. And therefore, the equity markets are far overpriced if that's the case, because you can't cut that much spending quickly without impacting that. So that's where, I'm looking at as we go forward here. And I fall into fiscal dominance. And when are they going to let me sit with Powell? The only time I ever got to ask Jerome Powell a question was in 2016. And I asked him about who stands behind the European Central Bank. He wasn't the Fed chair at the time, But I asked him very poignantly, who stands behind it? And his answer, he didn't even have to blink, was they have a printing press. And if that's his solution to all things, that's why gold is doing what it's doing. And I will end my own thoughts there.
Very good. I'm very happy you expressed your views, because I think, the ownership of gold is a necessity for anyone who wants to keep liquidity and its purchasing power. Because paper money loses the purchasing power, but not gold. And my view is that as long as we have central banking in the world and some academics kind of telling you the inflation is 2% or so, when their wives, when they go shopping, they know that it's more than that. The BLS had healthcare costs down 30% over the last 3 years. I mean, it's a mind-boggling nonsense. But this is what the statistician published. And as Ira said, gold is actually reflecting precisely what is happening now in the world, in the sense that the liquidity is so huge that it drives up some crazy assets like cryptocurrencies. And I'm not saying that gold is a crazy asset, but if there was monetary stability, gold wouldn't be in a bull market. The gold price is telling you there is monetary instability, and that this instability will lead, like Ira suggested, to a recession at some point. Most people are already in recession, but the government can show that GDP is going up because the government is spending money through the deficits.
But I have to come back and ask you, Dr. Faber, let's talk about the Swiss franc for a minute. Does it continue to sustain its haven value, which drives it higher and higher? And how does the SNB counteract that? Because they're certainly concerned about it.
In my view, the Swiss franc is not the same Swiss franc we had in the 60s and 70s. The president of the Swiss National Bank at the time was Leutwiler, and an ultra-conservative person, and one who, like me, had a very large collection of first edition of economists. He was a book collector, and he was a very well-rounded person. Or in Germany, in the early 80s, they had the head of the Bundesbank happened to be a friend of mine, because he also went to St. Moritz for skiing during Christmas holidays. Karl Otto Böhl. He was an ultra-conservative central banker. This is gone. This is past. The central bankers today, they have morphed into some kind of interventionists who think that they can guide, they can steer the economy. That is the worst delusion that you can imagine. And they will, I'm telling you, I'm convinced the next crisis is not solvable. It's not solvable. They can print money, but the effect will be not positive on the economy, but negative on the economy, and in nominal terms, things will go up, and in real terms, they'll go down. So I wrote in July a report that the financial markets are now at major turning points where the most popular stocks will not perform, and they haven't performed since July 10 of this year, and more resource-oriented companies. I mean, I'm not wildly bullish about the gold mining sector, but I can say that the gold mining sector is very depressed. relative to the S&P and relative to the price of gold. This is the first gold bull market where gold shares are performing worse than the physical price of gold. Same applies to silver, and platinum hasn't moved yet, but I think platinum will move.
Are there any other asset classes that you like going into 2025?
Yes, it's good that you're asking, because I think this is a part of what people look for in a discussion. If we look at bubbles in general, and due to my age, I've experienced already the Nifty 50 bubble in 1973 in America, and the most popular stocks were Kodak and Eastman Kodak, and the Polaroid and Sears, and so on. Most of these companies are actually out of business, including Xerox, which was at the time the most popular stock. And then I experienced the energy bubble in 1979, 1980, the Japanese bubble, the property bubbles in the late 1990s in Hong Kong and so forth, and the dot-com bubble and the GFC, and then anyway. In my view, the bubble is characterized by money, and in the current bubble, the money flows actually from all over the world. You understand? NVIDIA is a trading vehicle of people in Eastern Europe, in America, in Latin America, in Asia. Everybody gambles on NVIDIA through the options market and so forth and so on. NVIDIA hasn't done particularly well recently. But by definition, if all the money flows into one sector, by definition, there must be sectors that are completely neglected, that are not arising any interest from anyone, because people buy what moves up. And so as long as people believe that NVIDIA will go up, they buy NVIDIA, and they neglect other sectors and other markets and other regions of the world. So if we take valuations, I said that monetary inflation creates a lot of distortions in the economic and financial system. So financial assets are expensive by and large, but there are exceptions, and these exceptions include selected European stocks and emerging markets in general, and specifically Hong Kong and China. The Magnificent Seven have a larger market capitalization than the stock market capitalization of a country that is a relatively successful country in technology. They're no longer low-cost producers, but in technology, of more than 1.2 billion people, and Hong Kong of a modern city. So the two together have less market cap than the Magnificent Seven. And in my view, I am very familiar with the Hong Kong problems and so forth. But when I see the problems in Paris and in Frankfurt and in Birmingham and London, then I say I rather have the problems of Hong Kong than of these other cities. I'm Swiss from Zurich. I sometimes go to outside areas into the suburbs in Zurich. I don't recognize my country anymore. There are no Swiss living there anymore. I mean, I'm very broad-minded, and I live in Thailand. I wouldn't consider myself to be a racist. But for Europe to have taken in so many refugees is a very dangerous situation, because there are areas where the Swiss people are no longer safe.
Interesting. And yeah, just to end, we're cognizant of your time, Dr. Faber. Any final thoughts from you, Ira?
No, Dr. Faber sums up. I mean, you know, I'm just trying to understand how this whole monetary phenomenon, and more importantly, fiscal stimulus. And now Europe is going to go down a path of fiscal stimulus. So I like what Dr. Faber says about Europe, and I see, you know, certain companies over there. In fact, you know, one of my favorites is the Swedish Swiss engineering company, ABB, because the Ukraine war is going to end. When? Don't know, but Ukraine is going to be rebuilt, and a lot of other parts of Europe are going, because again, Europe is a very fragile, I think is the best place, and how the German elections play out, which are going to be very, very critical, because if the AfD garners enough part of the vote with the CDU, I don't think the Greens are going to get 5%, especially with the most recent thing that came out yesterday, where they tried to intimidate industrialists into not turning on those nuclear power plants. And this is a big thing for the Greens, because Germany is saddled. You know, they went down the Greta Thunberg road. You know, they were all intimidated by a 14-year-old girl with a microphone. And, well, they used her. They weren't intimidated. They used her to go down the road of alternative energies. And whether alternative energies makes its final play over the next 10, 20, 30 years, I'm not prescient enough to see that. But the cost to everyday people in pursuing those energies, as Doomberg and so many others, Goering and Rosen, you know, and these people have written about intelligently, and nobody better more than Vaclav Smil. So the cost, it was done non-thinking, as again, those who believe that they know so much better than everybody else, regardless of what the market tells them. And the market is a collective wisdom source. It's created massive amount of problems. And the massive amount of problems, if you live in an autocracy and a dictatorship, you can quiet those problems for so long. But with a democracy and more people vote, and look at Switzerland. Switzerland has more direct voting than anybody. I've actually studied the referendum system back when I was in university under Pertti Pessinen, a Finnish professor who was quite good. But democracy, you are going to have these forces rise. Look at France. France, of all places. And Le Pen is on the verge of something even bigger there, because Macron rolled the dice and bet wrong, as did Scholz in Germany. So we can hope but how these play out, and I'm hoping for the best. But again, scouring the globe and looking for financial alternatives or the best investments. And Mexico, we haven't even talked about Mexico. Mexico, of all places, look who they have. You know, Claudia Sheinbaum from so many different, and they're coming to terms. You know, it's interesting the way her and Justin Trudeau beat a quick path to Trump, because they know they have to deal with it for the best outcomes. Well, if you're looking for the best outcomes, look for the best investment alternatives. That's my words of caution. And that's what you should be doing. And with Scott Bessent as the U.S. Secretary of Treasury, he is interesting, because he is nothing but global macro. Go read, go watch interviews with him, but go read, buy yourself a copy of the Inside the House of Money and read the interviews that Steve Drobny did with some of the best global macro people back in 2005. And Scott Bessent is in there. And I would tell people, read it so you have a sense. Pay attention to Dr. Faber. Go back and read all the Barron's Roundtable that Dr. Faber did over 30 years, because you will learn a lot, because global macro is going to be the dominant thinking force in the world. So pay attention.
Any final
I would
thoughts?
say, don't read what I said.
Yeah. Just any final thoughts before you hit the streets downtown Chiang Mai?
Yes,
Yeah.
I mean, I really have to close down this interview because the pool tables are waiting for me
Yes,
and
yes.
the girls
Yeah.
anyway.
Right. Yeah. Okay.
But no, what I wanted to say, I think the investor has to understand very clearly when the bubble will deflate, and every inflation is followed by deflation. We don't know the exact timing, but my sense is everybody seems to understand in the world that you need to be long assets. When everybody understands the rule of the game, usually the rules are changed by the system, by nature, or by God, or whatever. And when the rules change, everything changes. And I was very interested in Ira's comment, who said you have to look for alternatives to the prevailing common assumptions of asset prices going up. And of course, the assets, as I said, by the definition, if some assets become very expensive, others become very cheap. Now, I have a theory. The US has outperformed Europe and emerging markets for now more than 10 years, okay? So the emerging world, in my view, is kind of forming a long-term base. It may still go down in a final push down, but it's like in 89, Japan was in the sky and other markets were very low, like technology stocks in 1990 in the US were dirt cheap, regardless, but nobody wanted them. And then Japan deflated for until 2003, 2004 by 70%. But at the same time, other markets went up. This is a possibility that the US will deflate and the money flows elsewhere. And I would buy assets that are out of favor. And what is out of favor is the value concept. The growth stocks have way outperformed lately value stocks, lately over the last 5 years or so. And so I would buy value stocks. And we talked before about, different investment ideas. I think in Latin America, there's some value. And I own stocks in Latin America, including the banks, like Itaú, Unibanco, and Bank of Chile, and Colombia Bank, and so forth. And in Kazakhstan, I own Halyk. These are stocks that are very low, at a very low valuation. The Uzbekistan stock market is selling at 5 times earnings. So also Hong Kong shares are very cheap, statistically seen. And yes, prices may still go down, but maybe not as much as people fear. And so when I can buy a stock at a 70% discount to asset value, I become interested in it. And my view is that we are in a period of turmoil and that the resource-oriented stocks, say you take oil stocks as the whole oil sector as a percent of the S&P, it's at a historical low or close to a historical low, whereas tech stocks are up here in the sky. And I've just seen, John Hussman, he's not the most bullish person, but statistically he's well informed, and he published statistics showing how the most expensive stocks and the most popular stocks perform in the long run. And in the long run, they don't perform better than the market. So it means that when they're grossly overpriced, like the case is now, they will underperform for a while. And I thought this is very interesting, that the public's money flows into most overvalued type of or expensive shares. And statistically, we can measure the PE, the price to sales, the price to book, and so forth. The US market is at a historic high valuation. There's no question about this. And other markets have a low valuation. And that's where I would look at opportunities. And the journalists, I mean, I just watched an interview on the TV, and someone, an Indian academic, he said, don't trust the Western media. They have a biased view against China. China was popular 5 years ago. Now, lately, you haven't read one positive article about China. But some smart people like Jonathan Tepper, he's a hedge fund manager in the US, very successful, contrarian. He's accumulating Chinese stocks. So I prefer to be on the side of the minority. And the other thing I want to say about the fiscal deficits as a final observation. I studied financial policy under a professor, and I actually found in my garage the books because they were underwater. And these are books. These are, financial policy. His name is Heinrich Haller. And he wrote about also taxes. He is actually the man who, under Erhard, introduced the value-added tax in Germany. He gave the academic background, the theoretical background, why the value-added tax is the fairest tax, aside from a flat tax. That, I believe, is the fairest tax. And so I'm very familiar with taxation, and I also wrote my thesis about the financial reform of Robert Peel, which created essentially the system of protectionism through the Navigation Acts and the Corn Laws in England. And that was positive for England, but negative for the rich people, because the rich people owned the land. And when the Corn Laws came off, the rich people had to compete internationally, and they couldn't compete, so the land price went down. But anyway, the theory of taxation is very complex. And when people say we'll cut tax or increase tax, it may not touch the people that you desire to help. Most tax reforms are favorable for wealthy people and unfavorable for the lower and middle class. Most tax reforms. And to fiddle around with taxation, you have to be very, very careful and know what you're doing. And most politicians have no clue what they're doing. That is the problem.
Wow, those are great observations and words of wisdom, Dr. Faber. Thank you so much for the
wisdom. What a nonsense in economics, wisdom. There's no wisdom in economics.
Thank you so much for the discussion, and thank you, Ira, as well. Yeah.
Thank you, and Dr. Faber, happy holidays, and enjoy the pool hall. Just
Yeah.
I mean, I just do it because I've been told that old people need to do something new.
Right.
And I have to say, since I drive my motorcycles again more actively, in the floods, my Ducati 1000cc died. It's now in repair, but for a while it's in coma because the spare parts are difficult to come back. So I bought two Hondas CBR 1000cc RR racing bikes. And since I ride these bikes again, I feel better.
Okay.
Good. Right,
they run like rockets. Rockets.
Thank you. I'm going to have to jump off though. Thank you.
I wish all of you a wonderful festive season. Merry Christmas, Happy New Year, and a lot of personal success in 2025, whereby personal success is not always linked to money.
Yep. Amen. Amen. Thank you.
Yeah.
Bye-bye, Ira.
Bye-bye.
Yeah. Take care.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.